The government looks set to continue its disinvestment program using the auction route. Now, this is fairly interesting in the sense that this would be the first time that this kind of route would be used in India. It's a separate trading window alongside the normal trading window during trading hours, whereby institutional investors can participate. All investors of all hues can participate. But for all practical purposes, the real flaw in the system is that the retail investors, for all practical purposes, out of the system, which to my mind is a trifle unfair given the fact that it is the taxes of the retail investor that help form these companies, especially the PSUs. Now, when one keeps that aside, when one looks at what happened in the recent FPOs and some of the FPOs in the last couple of years, the minute the government announced a price, the stock started taking a hammering. It would go down. Then there was the issue of offering a discount to retail investors. All in all, I think government paper was being sold at a discount, especially to the institutional investors and more so to the foreign institutional investor. So here is a system that might take care of that. But make no mistake, I think this time around, SEBI is changed the rules very clearly to facilitate the government disinvestment, primarily because of the huge gaping hole that is there in the budget at this point in time. Having set a target of 40,000 crores, the government has got a sorry figure with only about 1,000 crores being raised during this fiscal. So clearly, I mean, a little bit of sleight of the hand and the government could go halfway to their target at least and save some face. So that clearly is the primary objective of the auction, but going ahead, it could be a useful route, especially for the FPOs. Now, one of the caveats here one would have to take care is that we are assuming here that foreign institutional investors and mutual funds would be very interested in participating in these issues, because if they don't, and it's really government financial institutions that participates, it would just amount to taking money out of one pocket and putting it into the other, and that's not exactly what the objective of disinvestment was. If one remembers, the initial objective of disinvestment was to spread the shares among as much of the public as possible. Here it's going to be narrowed down to the hands of a few institutional investors. It would be worse still if it is only government institutional investors, because all they would have done is moved from government holding to government financial institutional holding. Let's keep our fingers crossed, given that the market headwinds are good, that there would be good participation and a good price discovery would take place, and that would help the government to a great extent. Once again, the only regret here is that for all practical purposes, the retail investors out of this process. I think somewhere down the line, the government will have to take cognizance of that and devise a mechanism whereby the retail investors are also included in this process.